Hey, what's up, guys? Welcome back to another video. Hope you guys had a great trading week. Hope everything was great for you guys. Overall, pretty great trading week. And yeah, let's get straight into the video. A little, weekly analysis, a little weekly recap on the week. Did take two trades this week. One I took on Wednesday, one I took at Thursday. Monday, Tuesday, really didn't see anything for me, especially Monday. Monday was a day that was pretty balanced. And then Friday didn't trade just because I felt that it was a little too volatile with Jerome Powell speaking at Jackson Hole. And if you guys don't know what Jackson Hole is, it's basically a lot of people consider it like a pre-FOMC meeting. It's like a little like a little like trailer to what may occur. And so he spoke there, talked a little bit about what he sees as potential stagflation in the economy, things like that. But that is something besides the point. And yeah, so Monday, pretty balanced day. You could really see we were just stuck in this like kind of just range, nothing really crazy overall. You could even see that we were really below average volume right here. Just zooming in there. On Tuesday, there actually was a great setup that missed, but that setup was a sweep below the previous day's low, which ended up working out, rallying into the previous day. It was high. I thought that was pretty good just because in balanced conditions, I believe that fading the extremes, and this is something I really emphasize a lot, is fading the extremes is really important when it comes to balanced conditions. So missed out on that trade, but other than that, started off the week with zero trades on the first 2 days, and then Wednesday I was able to capitalize on this downside. We did see kind of a nice little pullback in this nice little region. You don't see it from here because, well, me personally, I don't use candlesticks, but on the um, platform I use, you can see a nice little pullback. You could see sellers really stepping in. It's actually an area that actually defended really nicely later in the day, but really got that area short right there. After that, was able to capitalize on this move down, and yeah, great trade there overall. And on Thursday, had a small little L. Had took the market short like around here. I think it was a good idea just because I was seeing a little bit of slowing down from buyers, and I still wanted to see possibly a little balance just because we were opening within the previous days like wide range. But other than that, I think it was a great trade, just a little bit too premature because we didn't get within the what I consider probably that morning or that session's value slash volume. But and took a small trade over there, still up on the week, and then obviously Friday we had that crazy move up and other stuff like that. But overall, the market this week, there's been a lot of like headlines, or not a lot of headlines, but a lot of people, are like, okay, is this market gonna crash? Things like that. We did see, and look at it from like on a daily candle structure, you did see that we did have the first five, like I would say, first five red days in a long time from the market. You can really see right here. And a lot of people were like, oh my gosh, this is kind of the drawdown we need. We're about to crash. We're about to go even lower. Things like that. But there was a lot of hints that were really showing that. One of them is obviously showing that, offensive sectors maintain high. We talked about it. One of them was financials. Financials was consolidated below this important level around the 52s. We broke out of it, supported it pretty nicely, and ever since then we have been looking to long financials. We were actually able to long some regional banks, things like that. We've been able to profit off of this. XLY is another one that continues to rally no matter what. And so this is actually something really important that you could see. I believe that there's one important thing to see, and I'll show you guys after this, but XLK is, I believe, the one that took the biggest hit actually this week. You can really see that that one had the biggest drawdown, and then communication still rallying above. But other than that, offensive sectors maintain to be bullish. You could really see that on an individual basis, they continue to maintain above their moving averages. They continue maintaining a bullish resume. They continue to have that bullish momentum, and so compared to defensive sectors, which if you really look at it, were pretty balanced. You could kind of see XLP not really moving much, attempting to get above these 84s, but still to no avail. You can see that XLU is actually pushing up higher, but again, we have been slowing down, and a lot can argue that XLU is actually tied a little bit to, offensive sectors, just because a lot of the utility companies are based off kind of AI-driven motives, and so this could be another reason why. And then actually XLV, which is healthcare, something that is on watch. I believe it's still a little bit too premature just because It's not the most positive, but it is something on watch. It is something that, we are keeping an eye on. But other than that, you maintain to see offensive sectors outperform. Another thing to see, and I will show you guys here. Another thing to see is one thing that I like to look at is these averages. And these averages, as you can see, is the S&P 500 above the 20-day average, around 50-day average, and 200-day average. So this gets all the S&P 500 stocks above these moving averages and kind of plots it on a chart based off percentages. And so what I have here is this 50%. And so obviously 50% is kind of just like that self-explanatory level. 50% of stocks are above their what I consider 20 days short term, 50 days medium term, 200 days long term. If more than 50% of stocks are above their 20-day moving average, I continue to see that as kind of a short-term momentum to the upside. Below that, I see that a little bit short-term momentum to the downside. Things like also the 50-day moving average is something really important, and things like that is what I look at. And you can see that despite this, and this blue line shows it, despite the market actually having that drawdown period, you could kind of see that majority of stocks, as you can see, there was kind of this divergence, right? You see right here that the market was actually moving down, and a lot of the majority of stocks were actually moving higher. So it's really it's and they were really moving above the 200-day moving average. So you can really see that it kind of this kind of drawdown period was a little bit tied to tech, which was pretty down throughout the week. I think that was the most down. Looking at the Coifin, along the most in the past 5 days, XLK is down 1.23% compared to the market being stable. So it could be that, this drawdown was a lot of de-risking on those technology stocks, but overall we still maintaining that bullish resume, and you can really see that I was not phased by this drawdown, especially when it came to the swings, just because majority of stocks still maintain above their moving averages. That shows overall momentum to the upside. Short-term, mid-term, and long-term breadth maintained to the upside, maintained strong, and yep, that's something I was looking at. Another thing to look at is I have these ratios, and it's something really important, and one of them is XLY to XLP. XLY to XLP kind of shows consumer discretionary towards consumer staples, and as long as you continue to see kind of this these kind of as long as you continue to see consumer discretionary, which are stocks, which I spoke about, but to repeat, these are stocks that people are think of your luxury goods, think of unnecessary goods, goods that are only bought when you have the money. And as long as we continue to be in positive economic conditions and positive market conditions, people are going to have the money and are willing to go splurge on these unnecessary goods. And so you really see this slope upwards as XLP continues to slope downwards. Once you start to see this downwards, is you possibly want to say, okay, maybe people aren't willing to spend so much on unnecessary goods. People are being a little bit more cautious on what they're spending on. So with that being said, it could be possible that we are in bad economic conditions, bad market conditions, things like that. And usually during bad economic conditions, XLP is one that is monitored, just because it tends to outperform or actually not even have a large drawdown during these bad economic conditions. If you really go look back at April when we had that large downfall of almost 20%, XLP actually drew down, but not as much of 20%. I believe it was only down less than 10%. And so when you see stuff like that, people really like to allocate towards that because these are staple goods. Think of your Walmart, think of your grocery stores, think of things that you have to buy no matter what. And so that's something really important to see. SPY to TLT, again, this is just the overall market to bonds, treasury bonds. And as long as you continue to see this sloping upwards, you see that people are willing to allocate more of their cash towards stocks over bonds. As a lot of people know, bonds are those kind of safe assets that people buy when there are uncertain economic conditions, uncertain market conditions. So unless you see the slope downwards, then we continue to be in kind of a stock hungry market condition. Another thing right here, high beta to low volatility. People are still really interested in allocating a lot of their cash to those high beta stocks, things that those riskier companies that may not be so good financially, but people are still willing to allocate a little bit more towards that, just because they have some extra cash on the side. They are willing to have these higher returns or risk their money for higher returns compared to those low volatility stocks. You can see financials to the overall market. You can see that this really shows another reason why we were long in financials. XLK to SPY, you could kind of see this is a level that we've had a little bit of trouble in the last couple of, I would say, 2 years. So it's important to see what happens. So every time we hit it here, we end up to go lower. So it could be that we maybe de-risk a little bit less on XLK, on a little bit more on tech stocks. But it could be that we lag a little bit, right? That's another thing to see. And IWF to IWD, this is just growth stocks to value stocks. And overall, in the long term, growth companies have outperformed value companies. But we have seen, and really to bring it up here, we have seen that. Um, in the past month, and I would even say in the past 5 days, you could see that there has been a little bit more allocation from the big banks allocating towards value stocks, companies that are more stable, have more stable EPS, that aren't investing all of their earnings into their company just because there's unnecessary. Think of tech companies. Tech companies are going to continue to make their earnings and invest it as they want to continue to expand, grow their company. But something like a value company that has already established themselves in its market, that doesn't really need to invest its earnings and is just really stable, doesn't really need to do anything with its earnings. Maybe they'll invest a little bit, but not all of it, like some of these tech companies, like some of these Silicon Valley companies that do. So um, overall value has been something that has been allocated towards. So really important to see, and it's not the most positive when you are in a bull market. You really want to see growth continue and momentum continue to outperform in a bull market. So it is something to really be on the lookout for. Another thing is obviously U.S. sectors overall. You could still see in the whole quarter and even the whole month and 3 months that we continue to see these offensive sectors start to lead. You can really see XLK in the long run is leading. Communications, consumer discretionary, and even financial starting to creep up there. But overall, in the last 5 days, you could see communications and technology a little bit of slowing down and a little bit of creeping up from a little bit of the defensive stocks. You could see that, healthcare, consumer staples, utilities is something that's creeping up there. So is there a little bit of, a little bit of allocation towards, a little bit more less bullish sectors being money being allocated towards? It's really important. It's important to see as we continue to push into all-time highs. Um, but again, in the long run, we continue to be bullish, but we shall see on Monday on the rest of the week overall. But other than that, still great first week. Not first week, but still a great week overall. A lot of stuff still pointing to upside. You can really see. And yeah, we've been able to capitalize a little bit on. I think this week we took a little bit of the hits on the swings just because we had a little bit of drawdown, especially as you could see in communications and tech. But we were able to get a little bit of long in these pullbacks in these certain markets. For example, we did take a position in Google, we did take a position in Meta, and we have been profiting from financials, especially in regional banks, things like that. Those are stuff that we have been allocating our money towards, but we are looking at these kind of slowing down offensive markets and still seeing kind of these outperforming positive or defensive markets. It's just going to be important to see for the rest of the week. Other than that, straight into the volume profile, you could see that we had a double distribution on the day. We had a double distribution. We kind of left that low volume node in the middle. So that's going to be something important to watch. And so we did establish volume down here. And then off of Friday's news or Friday Jerome Powell, we did have that aggressive buy to the upside. So for that being said, showing the levels for the week. 3 levels I'm watching is still I continue to watch all-time highs as a weekly bullish level. I continue to watch these 64 62s, which is going to be the weekly key level, just heading into that low volume node. And I continue to watch these 64 35s, which is the start of kind of that low balance range that we had from this sell-off that we established. Inability to continue within this kind of balance or this volume being built up here, this distribution up here, I believe is a little bit bearish. If we are able to establish within this lower one, I believe that is more bearish compared to bullish. Establishing within this one is going to be more bullish than anything. But again, can't enter the market with any any bias. You always enter the market with a clean state. You always see what is presented to you, but the levels are going to be the most important. For the daily level tomorrow, we're going to look at the 64, 70. And I marked it out as a range. Sorry about that. My mic just disconnected. I marked it out as a range. 64.72, 64.62 is going to be something really important to watch just because that kind of is the start of these single prints. So it's going to be that low volume node. Do we continue to, do we get this pullback and sweep below this balance to really test higher? Or do we get low, establish volume within, and then continue lower? One thing I will say and be on the lookout for the week is that if we do establish within this kind of low volume node right here, it is going to be important that we probably will chop around. Usually when we establish within this like low volume node or the kind of these single prints, if it is something that they want to consider, they do just chop around. So be on the lookout for a chop around the 64.62s and the 64.35s. We could just see a little bit of balance on here, and that could be a slow day just as we continue to fix this imbalance and we continue to bring it back to a balanced condition, right? When we see this aggressiveness up, that's an imbalance. If we see back below it and we do not see a reaction, then the market is going to most likely balance that level, as you know, it's going to clean that imbalance down here. So be on the lookout for that. Other than that, nothing much to say. I think the last thing to do is, and I always forget about this, is news for the week. Nothing too crazy. We do have some small 8:30. Nothing crazy. I think we have, be on the lookout for maybe Richmond at 10, consumer confidence. Nothing too crazy. I think the biggest thing I would say is maybe GDP on Thursday. That's going to be at 8:30 before market open. So unemployment claims once again. And then core PCE on Friday. But other than that, still on the lookout for kind of these 10 a.m. news. I know they're not the most concerning ones, but it could be bad if you are in a position you don't want these to kind of scare you. You would just want to be aware that it could be it, right? Other than that, hope you guys had a great trading week. Hope you guys will have another great trading week this week. And yeah, I continue to say bullish markets. I continue to note that there could be a little bit of de-risking, a little bit allocating towards a little bit less riskier stocks, but we shall see for the rest of the week. Other than that, peace, guys.